Good afternoon. Here are the closing market comments for Tuesday, November 16th. Well, the grain market saw some huge losses, corn, beans, and wheat all finishing with near-limit losses. But it wasn't about negative fundamental news in the grains. It was about general fund liquidation across all markets. Energy's lower, metals lower, soft commodities including sugar, cotton, and rice all lower, as well as the equity markets and U.S. stock market all lower, pressuring the grain markets today. December corn finished 29 cents lower at 526 and a half. July corn 30 cents lower at 549 and a quarter. January soybeans down 66 and 3/4 at 1219 and 3/4. July soybeans down 66 and a quarter at 1224 and a quarter. Kansas City December wheat down 42 and a half cents at 690, and Minneapolis December wheat down 40 and a half cents, finishing at 705 and a half. Outside markets also taking some huge losses. Crude oil currently down $2.51 a barrel at 82.35. Gold market down $32 an ounce at 1,336. The U.S. dollar index also very negative influence on the grains. It's up 75 points, trading at 79.42. Stock market down 191 points at this time, with the Dow trading at 11,010. Livestock market's not immune to the general sell-off. December cattle down 77 cents at 98.45, and December hogs falling $1.30 to finish at 68.32. In the corn market today, the Argentine government overnight did approve 5 million metric tons of corn exports for this crop year. That's in typical fashion. They do this every year. The total exports are estimated at 17.5 million metric tons by the USDA. And in this release of the first 5 million metric tons of corn export licenses, that doesn't mean that China and Argentina aren't working on the business, but it has not been announced officially at this time. In China, the government is putting restrictions on the amount of corn that can be purchased at the weekly auctions. No more than 2 weeks of use can be purchased by any one organization at an auction, and the maximum amount of ownership is 30 days of use. Again, this is likely to try to keep from any hoarding of grain, as they're trying to do everything possible to prevent prices from exploding upward. After the fall of U.S. prices, U.S. corn is now competitive for import into China. The general liquidation across all markets is a major item that was pressuring corn today. In soybeans, the weather maps are wetter for Argentina and southern Brazil over the next couple of weeks, and the current forecast would indicate no major problems. Although we've seen a warmer and drier than normal trend, the maps going forward do look pretty good. Soybean demand from the crushing industry here in the U.S. as well as U.S. exports remains very, very strong. U.S. soybean basis is strengthening as the futures price falls, and the farmer selling appears to be reduced, and the end users may have to strengthen basis levels even further to originate enough beans to satisfy demand. And again, repeating that the general liquidation across all markets is the major item that pressured the soybeans today. In the wheat market, the U.S. winter wheat crop conditions did improve 1% following last week's rains across portions of Oklahoma and Kansas. The good to excellent ratings are now at 46% good to excellent compared to 64% last year, and is now the lowest rating in the last 10 years. Ukraine overnight extended its cap on exports through the first half of 2011. That is now in line with the current Russian grain export ban, which also lasts through June of 2011. There is talk that China is expressing an interest in Argentine wheat. This is in addition to talk that we've heard over the last few days of Chinese interest in Argentine corn. We did hear a purchasing delegation from China in Argentina, so it sounds like they may be working on a number of agricultural commodities. And again, making a point that the general liquidation that we saw across all markets is also the main item that was pressuring the wheat today. Let's take a look at a few of these outside markets that are seeing some significant fund selling and also adding pressure to the grain market. So let's begin with crude oil. Crude oil, after hitting a high up over $88.50 per barrel just about a week ago, has now fallen significantly. It's lost over $6 a barrel just in the last 3 or 4 days. And turning to the gold chart, gold also hitting an all-time high just a little over a week ago at $14.23, has now fallen nearly $100 an ounce over the last 3 or 4 trading days. Again, more liquidation by the funds. The stock market not immune to the overall sell-off, and the Dow Jones Industrial Average, after hitting a new high for this move up at 11,451 a little over a week ago, has now fallen over 450 points down below the 11,000 level. And again, as the stock market and other commodities fall, does put pressure on our grain markets. Now let's turn our attention to the U.S. dollar index. The U.S. dollar index, which hit a low about 2 weeks ago, just a little bit above 75 points, has rallied sharply and has now rallied up over 79.5. And as we've mentioned in the past, is that a lower U.S. dollar index makes our U.S. crops and all exports more affordable to the world market. So a rising U.S. dollar index is typically seen as somewhat bearish towards the grains. So with all of the other commodities sharply lower and the U.S. dollar index sharply higher, again, these are some of the reasons why we saw some general liquidation across all commodities, including some heavy selling in the grains. So we can see that the outside markets have seen a tremendous amount of selling pressure, and that's spilled over into the grain markets here in the U.S., but a lot of people are asking, well, what exactly is going on to cause this tremendous amount of fund liquidation in some of these markets? So let's take a look at a couple of the items today that are allowing for some of this outside market pressure. Fund managers are becoming worried that China may overreact in efforts to slow its inflation, and that could, in fact, slow economic growth. Due to a lot of the uncertainty as far as what the Chinese government may implement in order to try to slow inflation and decrease speculation, I think a lot of the funds are just exiting as a precaution. Another outside market influence that has put tremendous pressure on the grain markets is the fact that the euro is getting hit very hard, which in turn is causing a strong rally in the U.S. dollar. And the strong U.S. dollar is seen as bearish toward U.S. grain exports. The euro is falling partially due to the debt problems that exist in both Ireland and Greece. The EU has been unable to come up with an agreement on aid package to those countries, and world investors are losing confidence. This also is creating a lot of uncertainty and creating selling and liquidation of fund positions. Taking a look at our December corn chart, very disappointing action today, nearly limit down at the close. We've now filled the gap that was left in the charts back from the October crop report, and it looks like from both a chart perspective, which is a short-term downtrend, and the technical indicators, which are still pointed downward as well, that this market wants to test the long-term support line that's been in place from the lows posted last June. Turning to our January soybean chart, beans also having a very disappointing day on the charts, closing near limit down. It does keep the short-term downtrend in place, as well as the short-term technical trend is pointed lower as well. If we take a look at the short-term chart pattern as well as the short-term technical pattern, it does indicate that this market may be heading for long-term support to fill the gap left at 1153 following the October report, also where the long-term uptrending line is in place. Turning to the Kansas City December wheat chart, wheat also seeing large losses today, corn being a big factor, but also the general liquidation of commodities across all markets. After the recent price break of $1.30 in the wheat and the technical indicators now entering into the oversold range, I would suspect this market will start to find some buying around that 680 level, which was the lows that were posted in early October. That'll wrap up this afternoon's broadcast. Thanks for joining us, and have a good afternoon.